Monaco, a semi-enclave on the French Riviera along the Mediterranean coast. A country often called a tax haven. There is no personal income tax here.
The country regularly has a budget surplus, and within its 2 square kilometers, it has one of the highest concentrations of millionaires in the world. What's the first thought that almost everyone has?
Well, of course, all of this is paid for by the casinos.
That's exactly what James Bond movies, Monte Carlo, and endless roulette tables have conditioned us to think for decades. But now, that's almost a myth. According to official statistics, the gambling business provides only about 4% of Monaco's state revenue. The casino, which once saved the principality from financial collapse, has long since stopped being the main source of money. So a logical question arises: how does a country without personal taxation finance a budget that exceeds 2 billion euros a year? Who actually pays for the roads, police, healthcare, education, and all the infrastructure of one of the most expensive places on the planet? The answer is much more interesting than it seems. In the mid-19th century, Monaco was actually on the verge of bankruptcy. After losing the towns of Menton and Roquebrune, the principality lost most of its territory and main tax revenues. That's when they decided to bet on the Monte Carlo casino. Under the leadership of the entrepreneur François Blanc, it turned into the financial engine of the country, allowing the construction of hotels, theaters, parks, a railway, and establishing a reputation as an elite resort for the wealthiest Europeans. But today, gambling remains only a symbol of the country and a tourist attraction, while the foundation of the state's finances comes from completely different sources. Monaco has created a model that has almost no analogs in the world. The state barely taxes its residents' income, but it makes money very effectively from consumption, real estate, transactions, business, and from having wealthy people there. In fact, the principality does not sell citizenship or even low taxes. It sells status, security, prestige, scarce land, and access to one of the most exclusive jurisdictions in the world. The country has turned into a kind of financial club that the richest people in the world aspire to join. In this video, we will break down how this exclusive club for billionaires works, where the money in the budget really comes from, and why a square meter in Monaco has become one of the most valuable financial assets in the world. Each of us has 3 wishes right now. The first is for Ukrainian drones to find even more of the enemy's weak spots: warehouses, logistics, oil refineries, everything that fuels Russia's war, including the occupiers themselves. The second is that you can not only donate to this, but also earn from it, because money should work both for you and for Ukraine's defense. And third, so that Ukrainian miltech companies become the best in the world. Because if this war has proven anything, it's that the future of the battlefield is not being created somewhere in Silicon Valley, but here, in Ukraine. And now these 3 wishes can be combined through the Injur Miltech Fund. How does it work? You buy certificates from the Injur Miltech Fund, and the fund invests this money in corporate bonds of the Ukrainian defense company Weary Industries, one of the largest FPV drone manufacturers in Ukraine. Weary receives working capital and can scale up production. Ukrainian defenders get more modern unmanned equipment, and the fund receives coupon income from the bonds every 35 days and reinvests it to increase the value of your investment daily. The projected average annual simple return of the Injur Miltech Fund over 3 years is 25–29% per year in hryvnia. But it's important. You can only invest until December 31, 2026 inclusive. After that, the fund stops attracting investments. So this is a chance to simultaneously support Ukrainian defense, help scale Miltech, and earn money from securities. For investing, we recommend using the Injur app. It's faster and more convenient. It's available for iOS and Android. Why should you trust Injur? Because it already has over 100,000 active accounts. Its real estate funds manage assets worth about 7.5 billion hryvnias, and the value of investors' government bond portfolios with Injur amounts to almost 3.4 billion hryvnia. The income of Injur investors from dividends and capitalization already exceeds 0.7 billion hryvnias, and they have earned about 280 million hryvnias more from coupon payments. Details about investing can be found at the link in the description.
Historical foundation. How did Monaco fight for its independence in the shadow of France? Monaco's current status is the result of more than 7 centuries of diplomatic maneuvering by the Grimaldi dynasty between more powerful neighboring states. The official starting point of the principality's history is considered to be the year 1297, when Francois Grimaldi, who was nicknamed the Cunning, disguised himself as a Franciscan monk, infiltrated the fortress on the Rock of Monaco and captured it. Since then, the Grimaldi dynasty has been in power almost continuously. Over the centuries, Monaco has changed allies and patrons, from the Spanish Empire to the French Kingdom. During the French Revolution, the principality was completely annexed by France, stripped of its sovereignty, and renamed Fort d'Hercule as part of the Alpes-Maritimes department. Only after the defeat of Napoleon Bonaparte and the decision of the Congress of Vienna in 1815 was the sovereignty of the Grimaldi dynasty restored. However, by the same decision of the Congress of Vienna, Monaco was placed under the protectorate of the Kingdom of Sardinia, Piedmont Sardinia, which significantly limited its economic and political independence. A key turning point in the modern history of Monaco occurred in the mid-19th century. In 1848, the cities of Menton and Roquebrune, which at that time made up more than 90% of the principality's territory and provided its main agricultural income, growing lemons and olives, rose up against the heavy taxes of Prince Florestan and declared their secession from Monaco. To resolve this crisis, on February 2, 1865, Prince Charles III signed the Franco-Monegasque Treaty with Emperor Napoleon III. Monaco officially renounced its claims to Menton and Roquebrune in favor of France. The principality shrank to its current tiny size of about 2 square kilometers and became a micro-state. In return, France officially recognized the full political independence and sovereignty of Monaco, paying the prince compensation of 4 million francs and committing to build a railway from Nice to Monaco. During World War I, France feared that the throne of Monaco could be inherited by the German Duke of Urach. The treaty established that Monaco is obliged to exercise its sovereignty in accordance with the political, military, and economic interests of France. In addition, there was a rule: if the Grimaldi dynasty ended due to the absence of heirs, Monaco would automatically become a protectorate to France. In 2002, France and Monaco signed a new fundamental treaty. It finally abolished the rule about the principality being incorporated into France in the absence of an heir to the throne. Monaco will remain an independent, sovereign state under any circumstances. A tax haven without personal income tax, an elite ecosystem instead of fiscal pressure. One of the main foundations of Monaco's economic miracle is the absence of personal income tax. The beginning of this unique system dates back to 1869, when a sovereign decree by Prince Charles III freed the country's residents from fiscal burdens. The decision was made because the newly established Monte Carlo casino began generating colossal profits, which fully covered the costs of maintaining the entire apparatus of the principality. Today, this rule has turned Monaco into the world's most desirable magnet for private capital. However, becoming a resident of this exclusive club is not easy. The state sets strict requirements that keep out just anyone. The price of resident status. Preliminary stage. A Type D visa for citizens of countries outside the European Union. If the candidate is not a citizen of the European Union or the European Economic Area, for example, if he is from Ukraine, the USA, the United Kingdom, and so on, he can't just fly to Monaco and apply for residency. First, you need to get a long-term French Type D visa. Since Monaco doesn't have its own airport and only shares a land border with France, it is the French consulate in the applicant's country of residence that conducts the initial security check and issues this visa. The next step is a personal interview with the police. The application process is not just a purely bureaucratic submission of documents by mail or through a lawyer. Each applicant is required to personally undergo an interview at the Residence Control Department of the Monaco Department of Public Safety. During this conversation,
Officers check not only the documents, but also the sincerity of your intentions to integrate into the life of the principality and the legal source of every penny they've earned. Every candidate aged 16 and over who wishes to obtain a resident card must fulfill 3 mandatory conditions set by government instructions. 1. Proof of a clean record by providing an apostilled certificate of no criminal record from all countries where the applicant has lived in the past 5 years. 2. Proof of housing. Confirmation of a long-term lease for at least 12 months or ownership of real estate in Monaco. A key detail: the size of the apartment must be appropriate for the size of the family. For example, a family of 4 will not be allowed to register in a one-room studio. 3. Financial self-sufficiency. Providing an official confirmation letter from a Monaco bank. In order for the financial institution to issue such a document, a substantial deposit must be made to the account. Depending on the bank and the client's profile, this amount usually starts from 500,000 euros. Although the official government minimum for a deposit formally starts from 500,000 euros, in reality, elite private banks in Monaco, such as Julius Baer, companies like Monégasque, the bank, or Barclays Monaco, have raised the bar for internal client selection. Banking checks and control over the movement of funds here are so strict that most institutions refuse to issue a financial certificate if you're not ready to place from 1 to 2 million euros in assets or investment portfolios in your account. When the applicant has met the basic requirements, that is, housing, bank, and certificate, the state conducts 3 lengthy checks. Resident status is not granted forever. It's a long loyalty marathon. The first, temporary card, is issued for only 1 year. You need to renew it yourself every year for the first 3 years. The regular card is issued after 3 years of living in the country and is valid for 3 years. And the privileged card is obtained only after 10 years of actual residence. It is valid for 10 years and is the equivalent of permanent residency. The 183-day trap. Physical presence. To obtain and maintain a tax certificate that protects your capital from the tax authorities of other countries, a resident is required to be physically present in Monaco for at least 183 days a year. The local police regularly conduct covert checks. They analyze water and electricity consumption in the apartment, track transactions from local bank cards, and monitor mobile traffic. If it turns out that the apartment is empty, the status will be revoked. No liability for belongings. The difference between residency and a passport. The right to live without taxes is residency, and a Monaco passport is citizenship. These are completely different things. Obtaining Monaco citizenship is almost impossible. To do this, you either need to be born in Monégasque or marry a citizen of Monaco and wait 20 years. Or receive unique personal approval and the signature of the current ruling prince, Prince Albert II, for outstanding services to the country. Every year, only a few dozen people become citizens of Monaco by decree of the prince each year. The phenomenon of Formula One driver's residency. So why with such strict requirements? World sports superstars such as Lewis Hamilton, Max Verstappen, George Russell, Lando Norris, as well as hundreds of top models and IT entrepreneurs are ready to buy or rent tiny, by their standards, apartments in Monaco at astronomical prices. The thing is, the career of a professional athlete or superstar is very short-lived, and the income from global brands and sponsors is measured in tens of millions of euros. For example, 3-time Formula One champion Max Verstappen is estimated by analysts to earn about $55 million a year just from his contract with Red Bull Racing, not including personal sponsorship deals. If Verstappen remained a tax resident of his native Netherlands, where the progressive income tax rate is 49.5%, or lived in the United Kingdom with a 45% rate, he would have to give the state more than $25 million every year. Living in Monaco allows him to legally keep these millions at his own disposal. So buying an apartment in Monaco for 10 to 15 million euros is not just an expense on real estate, but an investment, which will fully pay off in less than a year, thanks to the taxes you save. Similarly, racer Lando Norris did the same, who now competes under the British flag in Formula One for the McLaren team. At the end of 2021, he told journalists that he was buying property in Monaco and moving here for the sake of his financial future. Additional benefits for celebrities: security and privacy. Monaco has one of the densest video surveillance systems in the world and the highest concentration of police officers per capita. That's about one officer for every 100 residents. Here, stars can walk the streets calmly without security, not fearing robberies or intrusive paparazzi. After all, local laws punish violations of privacy extremely strictly. The country ranks 4th in the Safety Index in the Global Organized Crime Index 2025, among the protected microstates and global destinations of Southern Europe. And in terms of crime rate, Monaco is far behind, at 184th place in the world out of 193 countries. In the Principality, the principle is, your freedom ends where a millionaire's privacy begins. Paparazzi here don't just risk getting a fine, they risk ending up behind bars. According to the Criminal Code of Monaco, any attempt to secretly take a photo, record audio or video of a person in a private place without their consent is punishable not just by an administrative warning, but by imprisonment. Infrastructure hub. For Formula One athletes who make dozens of flights to different Grand Prix events throughout the year, Monaco is a logistical paradise. The Principality is located just 30 minutes away from the large international airport in Nice. But if there are traffic jams on the roads, millionaires simply take a helicopter taxi from Monaco, a 7-minute flight over the sea, and you're already at your terminal. Helicopters here run every 15 minutes, like regular minibuses, and the ticket price includes a personal shuttle right to the entrance of your skyscraper. The French exception, a tax trap for neighbors. However, the rule of zero personal income tax, introduced by Charles III, does not apply to everyone. There is one historical and legal exception that concerns French citizens. According to the 1963 bilateral agreement, the Franco-Monegasque Tax Convention, which was signed after a tough political and customs confrontation between French President Charles de Gaulle and Prince Rainier III of Monaco. French citizens who move to Monaco are still required to pay income tax to the French Treasury at its regular rates. Today, the current French income tax rates are progressive and have several income categories, each of which corresponds to a tax rate, which ranges from 0 for income up to 11,600 euros to 45 for incomes over 181,000 and 181,917 euros. France blocked the possibility for its wealthiest citizens to hide their capital just a few kilometers from Nice. It is precisely because of this French trap that local motorsport stars with French passports see no point in registering in Monaco. Instead, they choose other countries. For example, Formula One driver Esteban Ocon moved to Switzerland, where a beneficial lump sum or fixed tax system is in place for wealthy foreigners. This system allows people to pay taxes not on their actual million-dollar incomes, but based on a fixed amount calculated from the taxpayer's living expenses and housing rent. And his colleague Pierre Gasly chose Milan, Italy, taking advantage of a unique Italian special regime for wealthy expats. This program, known as the Italian Flex Tax, allows ultra-wealthy people to pay an annual fixed fee on any foreign income. For example, from sponsorship contracts or international business, completely exempting them from the progressive income tax in Italy. The Monte Carlo Casino Paradox. The main paradox of modern Monaco is that its most famous symbol, the luxurious Monte Carlo Casino, for the country itself, is nothing more than a beautiful historical decoration and an area strictly off-limits to its own citizens. In the public imagination, there is still a stereotype that Monaco's budget is filled with money lost at roulette by wealthy tourists. However, the official financial reports of the Monaco Scientific and Statistical Institute show completely different figures. Today, the gambling business and casinos generate only about 4% of the total revenues of the Principality's state budget. All the casinos in the country, including the legendary Casino de Monte Carlo, are managed by a single state holding company, the Monaco Society of Sea Baths. The Principality is its majority shareholder, owning more than 64% of the shares. The SBM company has long made money from more than just gambling. But today, the lion's share of its income comes from renting real estate for luxury boutiques, the hotel business, for example, the iconic Hôtel de Paris, and managing premium-class restaurants. The casino serves as a powerful magnet for attracting wealthy tourists and creating a unique atmosphere of ultra luxury. But it has long ceased to be the financial foundation of the country. The most controversial and ironic fact about the foundation, enshrined in its legislation, is that native residents of the country, Monegasques, as well as ordinary residents of the Principality, are strictly prohibited by law from gambling in the casino. Moreover, citizens of the country are even forbidden to enter the gaming halls unless they are employees of the establishment. This prohibition has deep historical and moral roots. This prohibition has been in effect since the 19th century and was introduced by Prince Charles III to prevent the financial hardship of the local population and to attract capital exclusively from foreigners. This principle still applies today. At the entrance to any gaming hall in Monaco, every visitor is required to present a passport or ID card. If the system sees a passport of a citizen of Monaco, a Monegasque, or a resident card, such a person is immediately denied entry. From the very beginning, casinos were designed as a highly efficient trap for extracting money exclusively from foreigners. This logic still applies today. The Principality earns millions from the gambling of visitors, while reliably protecting its own population from gambling addiction and financial ruin. Millions from luxury. If Monaco has no personal income tax and doesn't profit from the gambling business, then who pays for the functioning of the state? The answer lies in a brilliant fiscal model. The Principality doesn't prevent the wealthy from earning money, but it makes them pay colossal sums when they start spending it. A consumption-based economy through VAT. The largest source of Monaco's state budget is not the casinos or direct taxes, but the value-added tax. According to the government's financial report for 2025, transaction and consumption taxes, where VAT plays a key role, bring in over 50% of all treasury revenues. In fact, every second euro in the Principality's budget comes from a tax on purchases. Thanks to a customs and fiscal agreement with France, Monaco is integrated into the French tax system. Therefore, the basic VAT rate here is also 20%. In most countries around the world, a 20% VAT is a heavy burden on the shoulders of the middle class and the poor, who buy bread, clothing, and household appliances. But in Monaco, where the highest number of millionaires per square meter is concentrated, this tax turns into a gold mine thanks to ultra-luxury goods. Super yachts and the maritime sector make Monaco the world's main hub for luxury class yachts. When a foreign tycoon buys a new vessel through a local broker, rents it for a cruise, or orders expensive maintenance at Port Hercule, 20% tax on these million-dollar services automatically goes to the government. According to the World Bank, the service sector and international brokerage form the foundation of the country's economy. High-end cars. Purchase of a limited edition Bugatti Chiron, a Pagani, or a collectible track supercar instantly generates enormous revenue for the budget. For example, a transaction worth 3 million euros at one of the official elite dealerships of the Principality, such as the famous Monaco Luxury Group complex or the Bugatti Monaco boutique, located right next to the casino square. He generates 600,000 euros in VAT from a single purchase. Considering that, according to European car market analytics from Giotto Dynamics, Monaco has the highest concentration of supercars and hypercars per capita in the world. This segment operates like a non-stop tax conveyor belt. The constant turnover of exclusive cars by local residents and collectors, whose financial operations are thoroughly analyzed by the global Knight Frank Wealth Report, makes the luxury car market one of the most reliable sponsors of the country's tax-free system. Jewelry and haute cuisine. Buying a diamond necklace in Cartier boutiques, Van Cleef & Arpels, or Graff.
Located in the modern One Monte Carlo shopping complex or on the renovated Casino Square, is also subject to the full VAT rate of 20%. When the bill for exclusive jewelry or unique watches reaches 200,000 euros, the state instantly receives 40,000 euros from a single purchase. Global luxury segment reports confirm that Monaco remains one of the most efficient shopping destinations in the world in terms of per capita spending. A similar system operates in the gastronomic sector. Dinner at the legendary 3-star Michelin restaurant, located in the Hôtel de Paris, where the tasting menu and collectible wines from the world's largest private cellar easily add up to a bill of several thousand euros for the group, is yet another voluntary contribution to the country's budget. According to the Michelin Guide Monaco, the concentration of premium-class restaurants in the Principality makes capital work for the benefit of the state every evening, turning a luxurious lifestyle into the main driver of the economy. Corporate tax is a filter for business. And here's another myth about Monaco that often circulates, as if it's an offshore like the Cayman Islands, where companies don't pay any taxes at all. In reality, that's not true. Monaco has a clear and strict corporate tax, with a rate of 25%. However, it operates on a unique territorial principle. It's a complete zero for local businesses. If a company operates exclusively within Monaco, it is fully exempt from corporate income tax, except for the first 2 years after establishment. This step stimulates the development of internal infrastructure, from family restaurants, hotels, and premium beauty salons to local logistics firms. The 25 rule for international business and royalties. If a company is registered in Monaco, but more than 25% of its total annual turnover, that is, revenue, is generated as a result of operations outside the Principality, it automatically loses the right to tax benefits. In this case, the company's net profit is subject to full corporate tax. In addition, under the same 25% rule, companies whose income consists wholly or partly of the sale or licensing of intellectual property rights are treated separately. Royalties from patents, trademarks, copyrights, even if these licenses are formally used within the country. This model perfectly filters out shell companies and fly-by-night firms, which are created solely for the purpose of avoiding taxes in another country, and at the same time, it fills the budget with real money from large international holding companies that are headquartered in Monaco. State monopolies, a hidden tax on comfort. Apart from VAT and business taxes, Monaco holds exclusive rights to key sectors essential to the country's functioning, which consistently generate about 10 to 12% of the budget. The state is a monopolist or majority shareholder in companies that control 1. Communication and Internet. Monaco's telecommunications market lacks the kind of competition most countries normally have. The entire range of services, mobile communication, home internet, landline phones, television, and cloud services for businesses, is fully controlled by the sole national provider and monopolist, Monaco Telecom. The company was established in 1997 as a result of the privatization of the state institution Office Monégasque de Téléphone. Today, the ownership structure of Monaco Telecom is a classic example of a public-private partnership. The controlling stake of 50.01% belongs to the French billionaire and telecom magnate Xavier Niel, the founder of the operator Free in France, and the owner of shares in many European companies. His investment company NGG Holding acquired this stake in 2014 for 322 million euros. The remaining 49.99% of the shares are held by the government of Monaco through the state financial corporation Société Nationale de Financement, thanks to its tiny territory of just 2.08 square kilometers and the enormous financial capabilities of its investors. Monaco Telecom uses the country as an ideal testing ground for advanced technologies. In July 2019, Monaco became the first country in the world to achieve full coverage with a 5G network. To provide next-generation connectivity throughout the entire territory of the Principality, it was necessary to install only 23 base stations, all equipped with Huawei equipment. The national operator completely switched the country to fiber optic communication lines, providing home and corporate internet speeds of up to 10 gigabits per second throughout the entire territory. Having a single operator allows the government to instantly implement digital environmental initiatives. The Monaco Telecom network supports the operation of autonomous electric shuttles, smart parking, and also enables Monaco's fire services to stream ultra-high-definition 4K video from drones during rescue operations in real time. NRG Energy and Utilities. In Monaco, the supply of vital resources such as electricity, gas, heating, and drinking water is carried out through a system of regulated state monopolies. All utilities are provided by two key companies: SMEC, the Monaco Electricity and Gas Company, and SMEO, the Monaco Water Supply Company. Since maintaining a luxurious penthouse or a multi-level villa on the coast costs tens of thousands of euros per month just in terms of utility payments, these companies are constant and rock-solid sources of revenue for the local budget. The company SMEC, Monaco Electricity and Gas Company, founded in 1890, is the sole supplier and operator of electricity and gas networks in the Principality. The Monaco government receives direct regulatory control and a share in the company's capital, participating in profit distribution through a concession agreement, while the operational partner is the French energy group EDF. Electricity consumption per capita in Monaco is extremely high. The reason is the round-the-clock operation of climate control systems in penthouses, heated swimming pools, smart homes, charging stations for private electric cars, and continuous power supply for superyachts. The tariffs include government fees and 20% VAT, which turns every kilowatt into an additional luxury tax. Monaco is a global pioneer in the use of marine thermal energy. SMEC develops and manages a network of marine heat pumps, marine thermal loops, which draw seawater for heating and cooling homes and cascading complexes, including the Grimaldi Forum and CBM hotels. This makes it possible to sell residents eco-friendly heating and cooling. All water meters in Monaco are fully digitized and connected to remote monitoring. Since the water tariff per cubic meter has a progressive scale, the more you use for watering private gardens or filling pools, the more expensive each subsequent cubic meter becomes. Large estates and penthouses pay the utility at the highest rates. Third, postal services and license sales. In addition to significant tax revenues from VAT and utility monopolies, Monaco's treasury systematically monetizes minor sovereign prerogatives. The issuance of postage stamps in Monaco is not just about providing postal services, but a full-fledged industry operating at the intersection of art, collecting, and public finance. All postal issues are managed by the State Postal Stamp Bureau, which reports directly to the Ministry of Finance and Economy. Each issue is produced in a limited edition and is dedicated to important events, from princely weddings, superyacht exhibitions, and Formula One Grand Prix, to rare species of fauna. Thanks to their high print quality and prestigious themes, Monaco stamps are considered blue chips in the world of philately. The annual turnover of the state agency is about 2 million euros, of which approximately 1.4 million euros comes from the export of philatelic products to collectors from all over the world. In Monaco, it is not possible to simply register a company or open a store by paying a standard state fee. Any commercial activity requires direct permission from the government. Government commissions assess not only whether the capital is legally sourced, but also the usefulness of the future business for the Principality's economy, the business reputation of the founders, and even whether the brand style matches the country's high status. The state charges administrative fees for issuing, renewing, and amending business permits. However, the main barrier is not the amount of the fees, but the strict requirements for capital, business reputation, the origin of funds, and compliance with regulatory standards. Thus, to register a company, the minimum authorized capital must be between 300,000 and 450,000 euros, depending on the type of activity. To hire a foreign employee or obtain a work permit, the company pays state fees and mandatory insurance contributions to special funds.
This allows the government to fully control the labor market and receive a fixed income from every job in the country. For prestigious fields such as financial consulting, asset management, and real estate, the fees increase significantly because regulatory oversight is added. To obtain a professional card, the founder must not only pay the state fee, but also deposit a mandatory financial guarantee into a special bank account or with a banking institution in Monaco. Usually, this starts at 100,000 euros. It is also necessary to obtain mandatory civil liability insurance. To maintain the license, all legal entities in Monaco are required to submit an annual declaration of ultimate beneficial owners and pay the corresponding annual state fee for updating and verifying this information to the government. The largest hidden administrative payment when opening a business in Monaco is the registration fee for renting commercial real estate. To obtain a permit, the company must have a physical office or retail location. The commercial real estate lease agreement must be registered with the Monaco tax authorities. The state registration fee is 1% of the total rent amount for the entire term of the contract, plus stamp duties. Considering the astronomical rental prices near Casino Square or in the Fontvieille area, this one-time fee to the state easily reaches tens of thousands of euros, even before the shop or office doors are opened. The economy of the most expensive square meter. When the total area of your entire country is only 2.08 square kilometers, every square meter automatically turns into a strategic asset. Monaco has turned its main disadvantage, an extreme shortage of land, into one of the most stable sources of state revenue. Real estate in Monaco is the most expensive on the planet. According to the official data from the annual report of the Scientific and Statistical Institute of Monaco, the average price per square meter in the Principality has already climbed past 50,000, or even 57,000 euros. And in elite areas like Monte Carlo or La Rousse, it can reach 100,000 euros, or more. The state does not impose an annual property tax on real estate owners. However, it makes enormous money at the moment of ownership transfer through registration fees and charges for processing purchase and sale agreements. When purchasing real estate, a private individual pays a state registration fee amounting to 4.5% of the property's value. If the purchase is made through a special offshore or foreign company, the rate increases to 7.5%. Considering that even a modest two-room apartment in Monaco costs between 5 and 7 million euros. Just one such transaction brings in between 225,000 euros and 525,000 euros in net duties. When penthouses worth between 50 and 100 million euros are sold, the state receives millions for a single notary's signature. According to the Focus Finances Publicis report, legal transactions make up the second largest source of treasury income after VAT. Since there are physically no more free plots of land, Monaco has taken an unprecedented engineering step by expanding its borders into the Mediterranean Sea. The most striking embodiment of this strategy is the large-scale eco-project Millionaire, formerly known as Anse des Portiers. This is a new artificial ecological district covering 6 hectares, or 60,000 square meters, built on reclaimed land directly in the water. It includes luxurious seafront villas, luxury apartment buildings, a new marina for yachts, a park area, and a promenade. To avoid harming the unique marine flora and fauna of the neighboring Larvato Reserve, the construction was carried out according to strict environmental standards. Around the future district, 18 giant concrete caissons, each weighing 24,000 tons, were installed underwater to form a protective belt for the land reclamation. Monaco did not spend taxpayers' money on this grand construction. The project was fully funded by a consortium of private investors. In return, the state received new public spaces, roads, expanded infrastructure, and the exclusive right to tax future transactions, all free of charge. Since the price per square meter in Millionaire starts at 100,000 euros due to the uniqueness of the location, the sale of each villa or apartment brings the state astronomical profits through VAT and registration fees.
literally materializing new financial resources out of seawater. Conclusion. The unique experience of Monaco completely shatters the classical notions of how a government should function. The Principality has clearly demonstrated that for a country to prosper, it is not at all necessary to impose mandatory taxes on citizens' incomes. Instead of fiscal pressure, Monaco has built a model that can be described as a publicly traded company in the form of a state. The Principality does not take away what people have earned, but creates such conditions of security, confidentiality, infrastructure, and prestige, under which the richest people on the planet themselves want to come and spend billions here. The state is funded not by coercion, but by luxury and pleasure. Monaco has turned its greatest physical disadvantage, an extreme lack of territory, into a gold mine. An economy built on the most expensive real estate and the creation of new artificial eco-districts like Millionaire bring money to the budget without any investment costs from taxpayers. The historical myth that roulette feeds Monaco has long been shattered. The gambling business, with its 4% share in the income structure, has remained only an elegant marketing tool and a historical brand, which, moreover, is firmly off-limits to the country's own citizens. Monaco successfully proves, if you create an ideal and safe environment for capital, it will not just come to your country, it will gladly finance its development. Monaco successfully proves, you don't need to force capital to come. You need to create the right rules of the game for it. And in your opinion, is Ukraine ready for such rules after the war? If so, where should we start? Write in the comments. Friends, we have an ambitious goal to reach 200,000 subscribers on the channel by the end of 2026. You might have been watching us for a long time and not even realize that you haven't subscribed. Subscribe to our channel and tell your relatives and friends about it. Also, give us a like and leave a comment under this video.
We thank all our donors, patrons and sponsors on YouTube. Every contribution you make brings Ukraine closer to economic prosperity and well-being. After all, we are not just making videos, but enlightening voters who will choose real reformers. Help us with this. The link to support the state price is in the description. OC.
The video was created with the support of the National Fund,
the National Endowment for Democracy. The endowment may not share the views and opinions expressed in the video.